Hey guys, it's Desi, and I quickly want to go over how I find my bias for the trading day. This is something a lot of people have asked me for, so I'll just break it down in this video and kind of explain to you what I look for on the daily, 4 hour, and 1 hour, etc. So to start off, I always look at the daily chart before open, and I'm looking at what market structure is giving us, right? Mark out some obvious lows or highs, even if they're way far out. We have an obvious low here. This would be sell side, and then we have an obvious high here, which would be the ultimate buy side target. And now you look at the daily, we're in a bullish market structure, right? And we're probably likely headed to that 4240 area because we came down, we had this break of structure on the daily, and now the market is in a bullish structure. Now, let's see if we can find anything important in the daily chart that's given us some type of confirmation for our bounce, continuation move, or whatever it may be. So we had this 4 days of massive rallies, or 5 technically, and then we came down and pulled back. Well, look at where we pulled back. We actually had a daily fair value gap here, right? So my bias remains bullish as long as this fair value gap is holding and we could break structure on the smaller time frames. So now let's go to the 4 hour chart, right? So let me delete this fair value gap because this is the daily. And now let's look at the 4 hour chart. What is happening on the 4 hour chart? Once again, we have another fair value gap on the 4 hour that we are bouncing from. And now you guys can see we actually have some structure forming on the 4 hour that we did end up breaking on Thursday, which I'll go over as well. And then so far the daily has showed us a fair value gap that's bouncing. We have an obvious high that we are about 100 points away from, and then we also have a 4 hour fair value gap which we are bouncing from. So now let's go to the 2 hour. 2 hour, we have this fair value gap. I'm not really seeing much. The daily and 4 hour kind of tell you the same story, and the 1 hour also kind of tells you the same story. However, you guys can see on this 1 hour chart, now that we break it down, we have a pretty obvious low left from Wednesday, right? When we traded back and had this little pullback. So what am I watching for is a pullback into this area here, and possibly have this as sell side liquidity, which gets taken and fuel for upside rally. So this was Wednesday, and going into Thursday, I'm like, all right, I'm looking for a take on this sell side liquidity and a break of structure on the smaller time frames, whether it be the 115.5, 30, whatever you guys want to use. Personally, I like using the 1.5 and 15, and I do occasionally use a 30. On this one, I actually did use a 30. So you guys can see this hourly, we have this sell side. So going into market open on Thursday, what I'm watching for is the market to pull back, come down to the sell side, and continuation back up, because we are still in the daily fair value gap, we still are in the 4 hour fair value gap, but now we have some fuel for this next move up because we took out the sell side on the hourly chart. So you have your sell side there, and now you want to go to your 30-minute chart and see what's happening. And as you guys can see, if you guys missed any of these moves down here, it's okay. What I always tell people is really all you need is a break of structure and a sell side or buy side liquidity sweep. A lot of people are like, oh, that's too wide of a stop. We'll just have a smaller size and risk the same amount of money as you would with any other type of trade, right? So what do we get here? We have this 30-minute structure forming, and then what do we have? We have a break of structure here. So if you're a break of structure trader, which I've personally been loving trading breaks of structure, what you would do is just set up your long position like this. Your stop would be under this low, and you could target liquidity all the way to here. So obviously in smaller time frames you have more liquidity to target, but just take out some highs. We have this obvious high here, we have this obvious high here, and then we have this obvious high here, and this is a really 1 to 2.3 risk reward. You could take that, that's fine. If you want to work on the smaller time frames, we could break it down into the 5-minute chart here. We have, and remember, why am I bullish down here? Because the daily is still in a daily fair value gap. The 4 hours in a fair value gap that's bullish. The 1 hour has swept sell side liquidity, so I'm also waiting. I'm engaged in that as well. I waited for that sell side to get taken out. I'm now looking for any type of structure to form and a break of structure. So 635, 645, 650, whatever. Right after market close, we came down to take the sell side, and now we have some 5-minute structure forming as well. As you guys can see, this would be structure forming on the 5-minute. Boom, break a structure here. You guys can enter here and target, this order block here, this order block here, and ultimately you have your stops something like this. So you would enter on this break of structure on this 5-minute candle close. You target all these highs. Your stop loss would be right under here. If you are a partial trader who takes partials, which I do, I would have probably hit TP1 here, TP2, and then got stopped out at break even. I personally didn't take this trade just because I did catch some moves during London before this. So, once again, a really clean trade, and even if you took a TP2 here, that's still a decent trade. Almost a 1-2 on this one as well. And now, if you're on the 1 minute if you're on the 1 minute, we have some more structure and some fair value gaps that you guys could take here. So we saw that sell side, which is the hourly sell side. We have a break of structure here on the 1 minute as well, right? So we had structure forming, and we had a break of structure, and we had this fair value gap that formed. So boom. If you're not a break of structure trader, sometimes you could miss your entry and the market might run away from you. However, I like, depending on what the situation is, if it's way extended on the break of structure candle, I don't enter and I'll wait for a fair value gap. In this case, I would have, entered here. That's fine. Small drawdown back into this fair value gap and target some upside moves. So you can mark out your take profit levels. This would be TP1. And obviously we have that order block up here. So it'd be kind of the same trade here. We have your TP2 around this area, which would be a 5-minute order block as well. So when you select your long position, if you would take it off this break of structure, it would be right here. If you take it off this fair value gap, you would have it right here. And then your take profit 1 and 2 would be here. Obviously your take profit 3 would be the higher time frame liquidity. And then your stop would be right under this. Once again, a 1 to 2. As you guys can see, we had a fair value gap here. And then we also created a fair value gap here, excuse me. Let me drag this and drag this back, as you guys can see. And then we ultimately ended up holding this fair value gap into higher time frame, which is honestly, most likely, you take your TP1, 2 and have your stops at break even. I personally would have kept them a little bit under my break even, just because this is such a high time frame liquidity sweep. As you guys can see, let's go back to the hourly. This is such a high time frames liquidity sweep, so you're most likely headed to the upside, because if you keep your confluences, you have your daily fair value gap, 4 hour, and your 1 hour liquidity sweep here. So let's break it down once again, because this is not about really about entries, it's more about bias. On the daily, once again, we had this obvious high up here where market structure is bullish. We had this break of structure early mid-March, basically. We had this break of structure and price failed to close below it after that, which means this is obviously a market is bullish. We had a daily fair value gap here. We're beginning bounces from. We had a bounce here, and then we had a bounce here as well on Thursday. And then you go to the 4 hour. The 4 hour is also in a fair value gap here. Got some bounce on the 4 hour as well. And then you just break it down to the 1 hour. And what are you looking for on the 1 hour? You're looking for any type of sell side liquidity, because we're mainly aiming for some sell side liquidity because we are bullish. Once again, our bias is bullish. So would we want to looking for longs here? And what did we get? We got the sell side liquidity here, and that's when you break it down on the smaller time frames, like the 5, 15, 1 minute, 30 minute, whatever it may be, and kind of get your entries that I already went over. So that's a very quick way on how I find my bias. I start with the daily, I go with the 4 hour. I do use a 2 hour. If the 2 hour is not showing me much, I go to the 1 hour, find some areas of liquidity that would be something that I'd be looking for to take, and then I go into the smaller time frames intraday and kind of gauge my look at the price and see what it's doing, get my entries off a break of structure on the 1 minute, 5 minute, any fair value gaps that form that could kind of help accelerate price to the upside, and target some upside liquidity, previous highs, previous session highs, basically just obvious highs. And I always try to go for a 1 to 2 at least on these type of trades, and that's pretty much how I get my daily bias for the day. So I hope this helped. A lot of people had questions about this, so I hope this kind of gives you guys an idea on what I do look for. And until next time, I will catch you guys.